Before buying any cryptocurrency, the next thing you'll need to know is how to manage your risk and protect your profit. Here are some golden rules for risk management. First, always place a stop loss, aka sell order, at a price which is 5 to 10% below the nearest support level. In other words, you'll immediately sell your coin to cut loss when its value goes down below the support level. So, why do we need to do that? Now, let's consider this example. Assume that you buy Bitcoin now at $9,125 per coin. What should we do as a professional trader? First of all, you'll need to analyze this chart and find out support and resistance levels. As you can see on the chart, we have a support level here, which helped push the price back up, and a resistance level here, which stopped the price going up many times in the past. After finding support and resistance levels, what you can do next is to place a sell order at a price which is 5% below the support level. The support price is around $6,500. So to find a stop loss price, you simply need to take $6,500 and multiply it by 95%, or 0.95. And we'll get a stop loss price of $6,175. So why should we place a sell order below the nearest support level? Most people tell you to stop loss, but never teach you how and where to stop loss. This is a very powerful trading skill that I want to teach you in this course. As we've learned, support is an area where traders found it attractive to buy previously. And if it was attractive once to buy in this area, it may well be again. So as a professional trader, we know that other traders will likely place a lot of buy orders at this support level, which can once again push the price back up. For example, after we bought this coin at $9,125, its value keeps going down like this. So, what should we do now? This is what you should have in mind as a professional trader. If the support fails to push the price back up, I'll consider selling my coin immediately to cut loss before the price drops further. So if the price drops to $6,175, I'll sell my coin immediately to protect my money. And if the support succeeds in pushing the price back up, well, my money is still safe, so I'll have nothing to worry about, and I'll keep holding my investment. Bottom line, when trading, make sure you always have an exit strategy in mind. Okay, the next thing. A bird in the hand is worth two in the bush, which means you'll need to take the profit immediately. You need to stop thinking that the price will keep going up because you don't know what will happen next. The cryptocurrency market is very volatile. Your coin's value may fluctuate 10% to over 100% a day. So there are chances that your good profit will turn into a loss tomorrow. A good trade will become a bad trade tomorrow. So you'd better sell your coin and take the profit before everything gets worse. So how do we know when to sell our coin? There are two price points that you'll need to take into account. First is 3% below the nearest resistance level, and second is 10% above that resistance level. Now, let's talk about the first exit point. You may consider selling your coin when the price is 3% below the nearest resistance level. For example, as you can see on the chart, we have a resistance level at around $11,500. So to determine your exit price, just take $11,500 and multiply it by 97%, or 0.97. You'll have an exit price of $11,155. So when the price goes up to $11,155, our sell order will be triggered and we'll make a profit. This exit strategy is more passive and preferable, as you just need to place some orders and you can make money even while you sleep. You don't need to get too involved in the market, and on top of that, you can avoid being affected by your emotions. In case you don't want to sell your coin yet, you may keep holding it a bit further, but you'll need to watch the chart closely before deciding your exit point. When the price is at least 10% above the resistance, there are chances that the old resistance will become the new support. This is very common in technical analysis. Sellers are now thinking that the price is going to go higher and there's no reason to sell their investments too early. At the same time, buyers also see this as an opportunity to get in the market, since the price has already broken upwards through the old resistance. This will eventually lead to more buy orders than sell orders. Sellers will also increase their asking price to take advantage of the scarcity and increased demand, which will finally push the price up. When the price goes up, you simply make more profits. In this case, you'll need to find the next resistance level to set your new exit point. And in case the price fails to break through the resistance level and goes down, you'd better sell your coin right away before everything gets worse. In the next module, I'll teach you some powerful technical indicators that I always use to determine if a coin's value will go up or down in the near future. The next section is very technical, so make sure you understand everything so far before moving on.